Okay, Aditya, thank you so much for coming to see here at Fintech Finance News. Can you please introduce yourself and your company?
Yeah, Aditya Vempaty. I run marketing as well as GM of our consortium product. And our company is a risk and compliance infrastructure company. And we basically allow customers in fintech, cryptos, neobanks, as well as credit unions to take their data, localize it, and give it in a single pane view, and do rules or alerts on them so they can catch fraud happening in real time, as well as staying compliant and catching money laundering also as well. And we really view data as being the central way of creating a world that is more safe and just by catching bad actors.
And paint us the picture about fraud in general in this digital world we live in. How likely are people, the average consumer, how likely are they to be the target of fraud?
Yeah, fraud is pretty prevalent, right? Literally, if you're doing business, you have fraud. Companies sometimes have 20% to 50% fraud. An example is like cryptos deal with fraud on a regular basis, where they deal with ACH fraud where, hey, I want to buy crypto. Okay, you need to transfer in ACH money, write a check or do ACH transfer. It takes about 3 days, and in that time, fraudsters will buy the crypto. In the 3 days it takes for ACH to recognize that it's fraudulent, they'll be off the platform and leave. That's one example. Another example is like carrier mules, which has been happening a lot with Ukraine coming up. So there's a lot of fraudulent activities where people are portraying themselves to be others, or others are being forced to do fraudulent activities that they don't even realize they're doing. So fraud is pretty prevalent, and minimum is like, I would say good companies experience about 1% to 2% fraud at scale. And then the ones who are not doing so great experience like 10 to 20% fraud at scale. So an example is if a company is doing $2 billion in payments in revenue, imagine 200 million is fraudulent. That's the type of scale and numbers we're talking about in fraud. And then on the other side, there's compliance. And compliance matters also because they're dealing with money laundering. Money laundering is often associated with people's lives somehow being upheaved, like sex trafficking, child labor, terrorism, as well as mass sales of drugs too as well.
So very alarming.
Very alarming, also very human. Fraud and money laundering are very human. Wherever there's money laundering or fraud, there's a human that's impacted. We're building tools that are removed from that, but imagine me or you had fraud happen to them. It's very pervasive. It's very also, like, what's the best way to say this? Alarming. That someone came to your bank account, took your money, or used your information to do XYZ, had your identity stolen, right? There's different vectors of fraud, but all of them lead to a human pretty much like being violated some way or some form. And then with money laundering, there's like worse actions happening where the financial system is now taking this money and trying to launder it, right? And an example also would be like environmental wise. There's a yearly about 100 to 150 billion dollars worth of business done in the Amazonian rainforest that's illegal, but they have to pump it through the entire economy. And how they do it? They have to push it in and do money laundering. And that's where catching that is actually impacts the environment also as well. So as you can see, there's actual human impacts as well as planetary impacts too.
And are governments and businesses taking note and taking steps to prevent this?
Yeah, I think it's becoming more and more key to seeing how fraud rings are working as well as money laundering is happening. And tools and infrastructure like ours help them do that. But ultimately, the fraud fighters and the compliance heroes are doing the hard work. They're getting all the data sources, trying to aggregate it, trying to be able to say, hey, I see all these patterns, what's happening here, and not having to waste time to go into engineering, saying, engineering, can you make rules for me? Can you update these rules, ingest this data? We're allowing them to take the data and take action themselves without wasting time. Because fraud oftentimes will take place, and within 2 weeks, that type of fraud vector will be gone. And there'll be a new type of fraud happening. So if you're not moving quickly, you're not going to catch the fraudsters or prevent it. Whereas money laundering, by the time you see it's money laundering, you file it with the governmental agencies and they act on it, that money laundering may have been paused and there may be a new form of money laundering happening. So response times are very key, and giving people the tools and infrastructure to combat these bad actors is really vital.
So do you have a team at Fraud Fighters that focuses on the next trends, the next technology to ensure they stay one step ahead of the game?
Yeah, so that's actually at Unit21, right? We believe fraud fighters are doing the hard work, compliance heroes are doing the hard work. And the way we set up our infrastructure is such that you take the data and you make the decisions when you see new fraud happening. And we have AI that says, hey, we're seeing these type of trends of data coming in. We're seeing these rules that you made not work as well. And they're actually like not flagging right information. Our ML sees the data set coming in and then says from an AI perspective, hey, this might be a rule you want to look on, and this might be a rule you shouldn't look at. So we're really just giving them the tools to combat the fraud or identify the money laundering as it's evolving. And that's really what our job is to do. We're just the guides, the Yoda, right? The Obi-Wan to the Luke, right? We're not the heroes, they're the heroes, they're doing the hard work. We're just here to give them the tools and infrastructure to modify and update as it's required.
And looking ahead, how is the fraud or anti-fraud industry evolving thanks to digital innovation? What are the next trends and tools that will be available to businesses and governments?
Yeah, so one of the key things that's starting to happen, and it was done for banks in the 90s, was early warning. All the big banks got together and they invested in this infrastructure where they could see data coming in of bad actors before it hit their systems because they were part of a consortium. So we're spending a lot of time on something we call the Fraud DAO, and it's a consortium of fintechs. And what we're actually doing is allowing those fintechs to share data between each other. It's completely privacy, so no one sees anyone's PII information. Data's all hashed, so no one knows particulars of everyone's actual information. The data's hashed, so they get the hash, and then they see, oh, does the hash match to my database? Yes, okay, I know who the user ID is. And that way, no one's PII is leaked. That's the first and foremost in these consortiums. You don't want to leak information. But you want to enable people to say, hey, someone that's a bad actor in your system, I have them too, but they were bad actors in your system, they haven't yet, but I know, I'm aware of this. It's saying there could be a bad actor, they could have those tendencies, others have said they have them, but it's up to me and my product to say, do I want to let them on or not, right? You also want to be not discriminatory at the get-go, but you also want to have alerts set up. And the consortium is what's really enabling that. We have about 20 million people, and we think that's where things are going to go to. As fintechs don't have a consortium and they need one, whereas the big banks have one and they don't want to give that information to fintechs. There's a dichotomy that's happening where fintechs talk to banks, banks talk to fintechs, but they're frenemies or neighbors that look over each other's fences, but they don't necessarily want to work together too much because they feel each one may take advantage of the information they have. So consortiums don't exist for fintechs because the data model is so different than the one that is for big banks. And that's why we think that's where things are going to go. And we have a consortium, as I said, and we have a few big players as part of it.